Hello, it's Doc for the ReadySetCrypto OMNIA newsletter update for Wednesday, the 6th of May. Kind of the same comments as yesterday. We have Bitcoin dominance once again. I mean, everything else is fairly flat across the board, across the top 20, but Bitcoin clearly is outperforming, and we're seeing that dominance figure continuing to break to the upside right now. We need to continue to watch Bitcoin as kind of the leading indicator for cryptocurrency right now. A couple of things going on as we look at the chart. I've got the RSI Laguerre down here, and you're starting to see the energy build back up again. This is because we dropped that one candle off the back. So all we're left with is kind of a repeat of what we saw at this point here. Now remember, this breakout came from an already exhausted chart. So many times we'll have this where a supply-demand imbalance really doesn't care what some study is showing on the chart. Regardless of the linearity that's happening, if the supply-demand balance increases, then we'll see a breakout from this. Notice also that the volume, which was very light across through the winter, the fall, has started to really tick up quite a bit. Notice something else that's happening right now. We're seeing the realized volatility starting to tick up while the implied volatility is starting to go down. And this is a strange thing that I've noticed here recently because, again, my thesis has been that the halving is already priced in, or the halving is already priced in for a couple of weeks from now, because we just didn't see anything being priced into the market going forward. But we're starting to see something opposite to that, where the realized volatility is continuing to tick up. Now, I don't know if this has any correlation to the halving at all, or it's just that risk assets are in accumulation right now. And this is what I think is more likely the case. So I'm going to recalculate the expected move. Really, the easiest way to do that at this point is just to take a look at the price, see where the price is. It's right around anywhere from the 9,000 to 9,500 level, right in the middle of that. We're going to just take the price of the calls plus the price of the puts as if we were buying them long. And that straddle price will approximately equate to the expected move going forward into the end of this month. So that is 22 days, 13 hours, 25 minutes from now. What is the expected move, or the 68.2% probability of the range going forward? Now, when I did this calculation on Sunday, the expected move was plus minus, I believe the number is 1,360 points. And calculating it today, I'm actually showing a number about 1,470, almost 1,500 points into the end of the month. So irrespective of the fact that implied volatility is not rising, the expected move certainly is. So there's a little bit of a disconnect there. What we're going to do is we're going to give ourselves a little bit more room to work with on this date here. And this upper move is going to move up to 10,720. So 10,720 is up in this area there. That's pretty close. And then the bottom marker of the expected move into the end of the month is going to move up to 7780. 7780, which is going to be, that's close. And so we'll pull it into the current price, which is right there. And that is our probability cone into the end of the month with a 68.2% probability. Again, I'd love to see a pullback from here, which would generate a lot of bearish sentiment. It would get the implied volatility going again. It would allow us to sell puts down at a level, but this thing looks like it wants to go. The volume is starting to pick up, and we're starting to see some strong volume spikes. And again, as we pull back to like a log chart on the monthly chart, this is really starting to show that signature that we're just coiling. All of this is just noise, just coiling up, getting ready for the next break, whenever and wherever that is. So I like where things are right now. I like the volume that we're seeing. I like the increasing expected move. Everything seems to be setting up nicely for the next big break. That's it for today's report. Thanks for listening, folks. We'll see you tomorrow.